Say again? Yeah. I'm going to put some. I'm going to put some. I'll just give it a few minutes for people to come online and we'll start. Okay. Hello. Well, it starts now. Just waiting a few minutes for people. Usually people don't come on time, so that's usually me as well. So I just want to give people time to jump in, and let's look at Bitcoin at the moment. A bit warm in my room, so I've got the air conditioning on, and then that makes me cough a bit. So I can't do both at the same time. Just be patient with me. Right. What I want to do is just talk about some key things on the chart, and what I'll do is just remove some of these blue arrows and all the rest, and what's obvious. So what can we go with? That's obvious. First, we'll start with Fibonacci, and we'll go from there. So we need to see confluence with fib levels, and then if it makes sense, because at the end of the day, moving averages and Fibonacci is pretty much where we find a lot of support. So there we got the 50 EMA perfectly acting as support, and we had support there in the past, and you can see what happened in the past, and it drops. But I'm just jumping ahead. Let me just get rid of these. So let's just clean up the chart a bit. Where's this fib? All right, that fib's there, and this fib, right. So let's look at the macro fib. So I use the bottom to the top, and we pretty much get this Fibonacci. We can use the previous structure as well for the fib levels, but what we want to do is focus on this right side and all the Fibonacci that is related to it. Don't worry about the formations. Formations at this point, these formations are given, so historically that's all they are, and we can see a bearish divergence or an ascending, a rising wedge, and we break down. Now in our group, I did measure this structure, and it's pretty much close to the target. So let's go through that. So we accept a few things on this chart. Basically, this top. Actually, let me just use another pen, maybe it'll be easier. We accept that this is a top, and we accept that this was a previous support, and this is the higher low, and so on. So we've got the higher lows, and this is matching just above this previous level. So this becomes important on the daily. What does become important? Because it's a trend. We do not want to see the higher low become lower. So we have a lower low. We have it here, and when we have that there, as you can see, when we drop that level, we do dip more. And so we've got this reference point at this point, right? Let's just get rid of that. So we know we've given this, and that's all we've given. And so what we're just going to do is extend that as well and see if it comes into the picture in any way. At the moment, no. What we have also is our indicators. And definitely, we definitely have bearish divergence that took place. And that's why we dropped. So we have a rising wedge. And this is 100% what a rising wedge does. You have a bearish divergence, and you have increase in price eventually. Right there, then there, we had, when we crossed over again, that bearish candle did the trick. That big one there, that one did the trick and forced the bearish divergence to play out pretty much. Now, when we get closer, we can see that that is support. Price came up, found that as support. So this Fibonacci becomes the 618 from that perspective. So we have a few key levels, few structural things in place, and moving averages are pretty important, and 50 is pretty important, but it's no big deal if we drop more. What we have on the left we can apply the volume profile to give us some confluence to see if there's anything else there. So we'll go into the built-in volume profile, get the fixed, and we'll just see what this gives us. We don't know what it's going to do, but we're going to give it a go, and we're going to see if it gets an average. All right, there's the average for that whole structure, this red line. So we're going to put that across as well. So all we're doing is preparation work. Preparation to see what comes up. So I explained the trend, why it's important. And if we lose that trend, we're just going to go deeper. And if I was to guess, it will be between those two levels. And we can't say at this point which one it's going to be. If we lose this level here, that we're going to lose the daily trend. Now, while we've got that in there, let's have a look at the monthly. See if the monthly has a specific level. So let's see if the monthly gives us any clues. And we can use these two candles, these two red ones, and this one here. So what we're going to do is just get the magnet out and plot some monthly lines. So I'm going to use this monthly on the body of the candle. And the top of that one. So those two red ones has given me a range as well. So these red lines are our monthly body, the body of the candle. So those should be strong monthly support. And let's go back let's go to the weekly, see if our weeklies gives us anything. The weekly is pretty much equal to monthly as well. You can see that with the red, give or take. And we've already lost one weekly level. So from a weekly perspective, you can see that that is a pretty bearish candle. And what we'd like to see to remain bullish is be above that level there. So we'll need to see it go above that level to become bullish again. Right, so we've got our, and I'll change that color so we don't mix up with the monthlies. And I'll just make it blue. Now we can go back in. Actually, leave it there for a sec. And what I want to do is get rid of this. And so what we've got here. No, that's not going to help us. So this is our weekly chart. What I'll do is add 10 weekly EMA. And you can see how confluence that has. And the 20 weekly moving average. EMA, that's the one. And the last one, I recollect, no, it was a 7, I think. 7 EMA. No, I didn't want that. Not the band. So what I'll do is I'll just add the 7 EMA with a moving average. I'll make that thicker. I think it's 7 or 8, I'm not sure. Why am I looking for that? Well, if I go to the daily, I want to show you that we need to pick the right moving average. It's got to be weekly here. And it's got to be historical support over here. So the 7 played there. Yep, so 7 is the one, I think it is. Yep. So we can see historically the 7 moving average played a nice role along with and I've got to fix the others because they're turned to daily. I want these to be weekly. And we've got the 20. Make that weekly as well. It's all the preparation work, and historically these are the 20 weekly and moving average is a big trend, and we can't lose that. When we lose the 20 weekly moving average, that's pretty bad. So what we have, the 7 and the 10, that's played a good, nice support role, and you can see how when we crossed over with the 7 and the 10, we pretty much had a bear market, small term bear market, but still a bear market, or an ABC correction. What we had here was a fib extension of the golden ratio on the way down, and I've discussed that in the past. So what we're going to do now is apply some of those rules. So what we can see here, we had confluence with the blue, where it and the orange, those two moving averages did play a role here, but once we lost those, we had a deeper correction. And then we found, and if we were to do this Fibonacci here, actually that wouldn't be the one. I think this was the one. Can we get up? Yes. So we had that support and resistance. Okay. So it's getting a bit messy. While we have confluence at this point, I just want to point it out. Just move across. We have the monthly supports, which is these two red bands. So what we can do is just say this band is the monthly support. And we have the 10 moving average coming across. So you can say, all right, that's a 10 moving average. And the 7 is pretty much not in play anymore, but the 10 is. So we have the monthly and the 10 moving average pretty much pointing to this zone at the moment, which makes a good case. And what we want to do is get a Fibonacci from this bottom to that top. Just measure a few things out. And if we have a retracement for the impulse, it gets to the 0.382 as well. So that another key fib level has confluence in that spot. So what we have right now is a strong case for support here. At the moment, the candlesticks don't give it to us, but what we can see is that this area can, and pretty much, for, as I said, the daily, this level has to hold, and the bulls need to come in. Otherwise, we're going to have a deeper correction, which is probably down to this level here, which is 54K. So if we were to lose that level, it's more likely to actually, we've got this profile as well, so not forget that profile. This volume profile that we have here, the majority, that averages it out there. So this level can be the next level of support. What I don't like about it is that we lose the daily. So if we were to lose that level, it's going to likely to play resistance if we were to lose this level, and we'll probably find a bounce, and then 10 weekly moving average will become resistance. So it's likely that we'll come down further and pretty much do another type of wedge scenario, in my opinion, and a delay. So if it was to come down, then we have that kind of wedge formation. Maybe a tight one, but nevertheless, depending on how it plays out, that's the worst case scenario. If it goes sideways a bit, you can see that can go down. So this, if you were to buy in, so buy the dips, and if at the moment we have one nice green candle in daily, and you can see historically as well, this area was an area of demand before. So as price try to come down all the time, this layer was all demand with all those wicks, and it stayed there for a while. So this was an accumulation area for either retail or the bulls. Right now, it's acting as resistance, which is the problem. But at the same time, we have this monthly support. So we're in a squeeze, and we don't know which way it's going to go, really. We can go up, and what will make it go up at this point, it's if the whale, we have no data except keep watching it and watching our indicators to see if there's a bullish divergence coming in place. So if this was to keep going sideways, we need to see divergence coming in. First in the smaller time frame, and we'll see on the RSI, very similar to this one here, actually. So what we had here, we had a bullish divergence right here on the RSI, and if we move that up, you can see how price is flat, but divergence is coming in. And when we break that, when it comes to the RSI, when we break that moving average in the RSI, it becomes our momentum, and usually represented by one or two bullish candles. So you've got a red, green, and then a big green. That's pretty much it. That's a reversal. And here we spend probably a week, and we had the cross of the MACD as well, with this, along with this. Excuse me, guys. Let me just go and get a glass of water. All right, I'm back. So what we're doing is we're exploring the scenarios as what to look for, and I'm not going to try and be a fortune teller in this case. What I want to do is just map it out. Map out where is our key support levels, where are our key resistance levels, and so on. So no one's going to be out there telling you exactly what's going to happen. All they can do is what I'm doing, which is highlight areas of importance. So what we have here in the past, we have a number of layers, unfortunately, and those three layers, there's basically three layers within that structure that is all strong support, and we need to break through it. So the great thing is we broke above this level with momentum, and so when price goes back to back test it, it needs to stand against that. And so we have basically one more layer, which is obviously this one here. So we can probably say that layer there, just put a different color. That layer, so that you can see pretty much three levels in that. Though by breaking this with momentum and decisiveness, the back test got rejected. I mean, rejected in the sense of going down. And then obviously we've got an all-time new high, which was a key fib level, and basically overextended. The market's saying it's overextended, and therefore we're pulling back in. And what we're going to do is retest this level. Now, we could be here for 2 weeks within this zone, just in this area. And I'm just talking about a wedge scenario, but we might not get any formation. We might just accumulate. And so it's not a real, it's got to be patient in that sense and wait to see what the cards give. And the longer we stay there, then you can probably decide to jump in if you've got funds. And the question is, what are the alts going to do? And it really comes down to the structure. So what we have here, and if anyone's familiar with certain structures, we pretty much had an inverted bar setup, and it's a very positive structure, and it usually goes to the upside. But in such cases, we get a pullback. So the structure itself, from this previous all-time high, coming back down and breaking it, all the previous level of strong resistance with decisiveness, is a good case for going up higher. Now, in the past, I've spoken about this structure, and that area that we're in is a shakeout area. And the shakeout area it's very difficult to trade. So trying to trade this is going to be difficult. What you need to do is find the levels that you're going to accumulate. Find the levels that you will just be okay holding. And in some cases, something will give us a clue as to what's going to take place. So what I can do now is look at the small time frame. And this is the 4-hour chart. And what happened, and if you're on my Telegram channel, I did mention that there was going to be you put your stop losses around here, okay? And so we were looking for this to make it at least a double top. So this was a double top. I thought this might be the case where we can go higher. That didn't turn out to be the case, and we had our stop losses just under this trend line. So I recognize this trend line as significance, and when you see price respecting a trend line for a while like this, and then it breaks it, this is where and like I put a stop loss, and that's what happens. It just drops. So, and it drops hard because you just lost a key level, and so people will say, all right, I'm out. Okay, so the ones that come in late, and I was just trying to do a leverage trade, and I got stopped out. But my point is, this level was significant, and what we've done to measure that, we measure that height to that neckline there. And you can say that, in a way, it's on the sideways head and shoulders, or just triangle in some formation. At the end of the day, I use that. And if I was to put this down and measure from the breakout point, that red zone has confluence as a target. Okay, so that could be a wick. So when we say if it loses that level, it doesn't mean it can't go below that level. What we don't want to see is a daily candle open close below this level. So we don't want to see a daily open and close below this level. If it does that, then it's much more deeper. So it's something that we can't anticipate, but something that we need to acknowledge that this definitely has a target, a bit more lower. And let's have a look at what else can we use to find that. We also have, as you can see, this blue Fibonacci. So I'll make it black. We're doing the Fibonacci extension. I'll make it thicker. Actually, that's not the line. I want this. Cool. And if I get closer, what I did was from the swing high to the swing low. So I use this level. From swing high to the swing low, to the swing high for the fib extension. And you can see it's exactly, no, that's not the one actually. I thought that was the case. Let's get rid of that for a sec. Let's do it. I thought that was the case. And so from the top to the bottom to the top, and what we have, let's just make sure our logs are on. Okay, what we have, and unfortunately I can't really, I might be able to just increase the size of the browser, and you can see here that level was the 1.272 extension. So the 1.272 is okay, but the next level where the red is the 1.414 and the 1.618. So it's acceptable for it to come down to these levels as well with the correction, with the ABC correction. So we've got the ABC correction, and pretty much this red zone is acceptable to going in. Can it make it? That's the thing. We don't know. So my strategy is buy that dip, and if it drops more, I'll buy that level, and I'll buy that second level. I really want to get the leveraging going. So if the leverage opportunity comes, I need to see the type of structure it brings out. And if I can see something that's a reversal pattern of some sort, then I'll leverage in. You can see this yellow line. We had that structure there, which was an inverted head and shoulders. So it hit its target. So we had a bit of an inverted head and shoulders here. And that target was met by this yellow line there. So that was a clue. And you can get that and apply it to the bottom. And that also fits into the level. So we've got a number of ways of looking at this. The last part, if that is a wedge, an ascending wedge, we can use that as well. We can use the top to the bottom to the neckline, and we can apply that as well. And that gives us a deeper correction, which goes, as I said, if we have a deeper correction, it could go down to 54, which is roughly there. So if this was applicable, this ascending wedge, then this makes sense as well. And that's when we say, okay, we lost that deeper, but this could be a wick. So there's so many ways of looking at this, and I do believe that this red zone is the buying zone. Although I do think this will come down a bit, and then just slowly come down, and then get a reversal. If you look at the past, as an example here, we get rid of this. Whenever you have a bounce, so see here, this area, we're going to have bounce. If I was to measure that bounce, I'll get rid of the magnet first of all. From the top, you'll see it's the 618 as acting as resistance. So we have a bounce, and then we'll go deeper. That scenario can play out here. Okay, so if we get rid of these things for a sec, and we do the same from the top to the bottom, our 618, I'll do the opposite, sorry. Our 618 is where the yellow line is, and that's going to be a strong resistance. So we can potentially, in the coming week or two, we might get a bounce, but we're going to definitely either get a rejection there and come down, or we're going to get a rejection there and come down. So I do expect that, and I expect something similar to this where there is a rejection, and the question is, do we get a double bottom? So if we get it like this, do we get a double bottom and up, or do we get a further deeper correction? And the only thing that we can use at the time is our Fibonacci, our MACD, and so on. So if the MACD, and in this case you can see how the MACD really helps us out, a straight line, we don't break above it, we get crossover, and we have a fair bit of resistance at the 618. So I'm looking at that for the bounce. I do think there's going to be a bounce. I don't think it's going to drop straight away. I think there is a bounce. The question is, are we going to get a resistance at the 382, the 0.5, or the 0.618 and down? And at this point, the 0.382 looks like it's going to act like a strong resistance, and that's my thinking, that if we get this rejection, we could probably a double bottom and then up, or we'll get one level lower and then up, and that will give us our potential wedge. And that's the thing. You've got two scenarios that can play out. So I wouldn't be going long anytime soon. I would just buy the dips, and if it was to drop past this, it depends how hard it was rejected. You will get an idea. Right now we're seeing the MACD looking to cross over, and if it does cross over with a bullish candle, this will tend to go up, and with the RSI we can see a potential break past that line, and if it goes above the 50%, we'll see a nice move to the top. But again, this level, that middle section, is where I expect to find rejection. And so now let's look at another chart from the whole big perspective. If you've got any questions, just let me know, and I'll try to answer them. If there's any questions with Bitcoin at this point, what I'll do is I'll bring out another chart. And let's look at it from the big picture. This is another profile, and it's cleaner. It's a cleaner chart. And now we've got these volumes on the right with the blue, levels of confluence. So you can see this volume profile. We've pretty much lost that level. So this area is going to act like resistance, like I said. Then we've got this volume profile here, which is looking like support, and it's got a lot of, and it's at the macro Fibonacci level, which could, like I said, go up. We didn't even talk about this red line. So you can see this other perspective. And let's clean it up a bit, because I just did what I did. And just looking back from a distance, you can see how this level here is really nice, a nice support area. And you can see it all along the way. It's just strong. It looks very strong. Historically, what we had here, like you can see here, support, resistance, resistance, support. So this area had a lot of confluence right in the middle, and it equates to the 0.618 level as well, and it equates to the volume profile. So how long we're going to stay here is the question, and I think this price will come, like I said, likely to come here And Bitcoin has a habit of pushing down to the last level. So what we got, I believe this trend line this is the way, and that will be the spot where we can get a lot of support. If it was a drop, I would put 100% in. If it comes down to this level, I'll put 100% in. Like if it came, I would definitely put my money in there. And I don't have much left, but what I'll do is what I'm looking at is borrowing money to buy that spot. By then, let's have a look at two other things I want to show you, and I'll come back to Bitcoin. And where are we? Let's open the chart, and we'll look at ADA as well. No worries. This is just my website. You can have a look. It's called the Apps Extension. What I do is I just stuff that I can't remember, I just put there, and I use those links. So I just anything that I come across, I'll put those links in there. And where is that tool? All right. So first thing I want to look at in the past. So what we have is neutral, which is not bad. Today's neutral in the fear factor. And you can see in the last week it was extremely greedy. So we had to come back. Yesterday's dropped to 652, and now we're slightly 54, and that's because some coins have made some moves. If we look on the monthly, let's see what it looks like on the month. Okay, 80, all right, 3 months. So we had a nice drop. Last time we're not going to get that level. I don't think so. Somewhere in the middle will be nice with the fear factor. Neutral's all right. And a lot of people have been talking about leveraging. The leverage chart has been high, and what was it called? Actually, where is it? Give me a sec. Last night. Was it last night? I'm not sure. Okay, so no, this wasn't the chart I was after. All right, all I'll do is I'll bring up another chart. Give me a sec. And we looked at this chart. All right, so I'll bring that here. Give me a sec. This chart here. So this looks at the wallets that have been over 1 year of holders basically, and you can see on this chart the long-time holders start to relinquish their bags as it got to a certain level. And over here, this is the accumulation area, and surprisingly, you will see that. So this is a bear market, right? This area is a bear market area, and we did the same. We pretty much, in this area, when we hit this bottom, it's really no different to the bear market level of accumulation. So that was very surprising that we went that low. And so it was in that aspect, it was a bear market. And what is a bear market? Well, that definition is very different. But basically, we had our ABC correction, and that was a wave 5, like a smaller wave 5 move, and we had our wave 3 to 4 all the way to wave 5, and then we had our correction. So that is a bear market in that perspective. I talk about bear market, and what you can see that is, as soon as it got up to that level became a bit of resistance. You can see across, and so what we have, ever so slightly, a trend line with this with this chart. So what we want to see is, in terms of accumulation, we want to see this break above it. Charts are charts. They come in many formations, and this to me is no different. Although I don't have the tools to, because you need a T3, and that's like $10,000 a year. I can't afford to do that. Not for this type of. I'd rather get off to other people. But my point is that this chart is a good indicator on-chain data that while we're having a bit of resistance is because of this area. But I'm not drawing the best, but that level makes sense. So if I just clean it up a bit more, this on-chain data gives us another perspective. If I was good enough to draw that line, where is it? There we go. We did peak above it. There you go. We did peak above it, and we're picking up again. So when we're knocking on that strong trend line, it's actually a real good sign that we broke above it, and we are likely to continue on. So we're looking at using this as support from that perspective. I really like this chart. And there's another one, and just give me a sec. So it's good for you guys to see other charts outside certain perspectives. And I'll show you this one. Here's the second one for Bitcoin. And what we have in the past, this was 2008 bottom, all this area, which was accumulation and which is a bear market. And then 2019, again, a bit of a bear market on that chart. Right there, when we hit, I think it was 14K, and it went down all the way to the COVID scenario. So we went down, and there was a lot of accumulation there. And as soon as we break that level, we had our bull market. And you can see right now, 2021 bear market. And we're almost breaking above, just similar to these levels. As soon as we break these levels, someone's done a good job. So we're about to break above it and then go. So yeah, we couldn't probably pull back a little bit, but with the other data, including this data here that we looked at before, we don't have red, and we have a little peak, and you might just do a little reversal and then up. So this on-chain data also gives us another perspective that we were and we are in the accumulation phase of a bear market, and this data really gives a good this different perspective. So I want to share that in regards to Bitcoin. So let's go back to Bitcoin. And so this accumulation phase, these dips are all accumulation phases, and I think this is going to be a real good spot using this trend line. I don't believe the trend lines like this, and I'll give you a reason for it. I don't believe that trend lines like that, because if you looked at my other chart, I could be wrong. That's not right, but I use this red line from my other chart, which is here, and I use the pitchfork. And the pitchfork, if I can grab it, somewhere around here. Here it is. That pitchfork so let's just get rid of some of this stuff. A lot of drawings. Just hide. So if you look at this big structure, you can say that's a channel. And the way the pitch, I won't go into the pitchfork, but the way this represents is anything that goes outside into the red zone is overextended. And so we can see that in this case, if I was to do this correctly, it's probably not exact. So if we use that as a red zone for pulling back, we didn't quite make it there. So this, if this goes into the red zone, and if we use those lines that I showed, I also use this level. So the red line, that's my trend line based on that pitchfork. So I won't be using this point to point. It can happen. If this goes sideways a lot, it can happen. But what happens is this red zone is overextended if it's an uptrend, and I'm just going to use that parallel line from the previous as a means for coming. And you can see this moving average also. So if this was to go sideways, this moving average will potentially go around like that as well, and potentially just go like that. So if this price was to bounce, we could see that being a pivot point as well. That scenario makes sense to me as well. A bit lower, and like I said, there is like possibility that it can come down to 618, like I show you. We have a 618 there, and that's just good as any. So you can see from many perspectives that Bitcoin is not just going to fly up straight away. That pullback is pretty much good reason to respect it, and this ascending wedge, and so on. So we have those perspectives, and what our excuse me, what we can do is just watch our indicators on the daily as well. So what I'll be looking for is a bit of confirmation from this one or two tools that I got here. And everyone that's familiar with me, my stuff, I use this Phoenix, and if the green RSI along with the momentum, basically these RSIs measuring the distance between them, amplitude, we need to see this green come up to the 50% level, number one. So there's not going to be any reversal until this green comes up. And then we want to see this orange also come up. And that will be the first sign that there is a reversal. If this red comes up, followed by and passes the 50%, that in my mind, that's confirmation that that's a good zone. So I can use these indicators. I can also use the RSI as well. If there is any tips, at the moment, this is all we got. So if the RSI breaks that red line, that could be a good clue as well. But I'll be looking in conjunction with these two. So we don't know how deep it's going to go, but right now there is definitely no chance of it going skyrocketing while these are there. We need to see really good momentum, and it's not there. When you see stuff like this, where you see a bullish divergence, see this? See how that's a bullish divergence with the green and the red RSI. See how when it hits 50% right here, the energy is up above 50%, and as soon as the red goes above 50% right there, you see what happens. So you get these two bullish candles to confirm, obviously, but the green one did it first. The green RSI on the daily did it, and that drags the rest up, and then you get all these moving averages or RSIs above 50%, and the momentum's up. And you can see when we go below it, when we go below 50%, there's a big drop. And there was a bearish divergence in the making. You can see it all the way through. The conventional tools also show it. And that's pretty much it. So we've got a number of tools to use, to watch. And so anyway, we have a scenario there. We can potentially play this type of wedge scenario, or we can play a smaller version of this. And I'm looking for that. All right. Now, let's have a quick look at Ethereum, which sometimes Ethereum is ahead of Bitcoin. It does play sometimes it front runs it. It's much more aggressive in some cases. And I can see that Ethereum has found support on this moving average, which is probably the 50. Yeah, that's the 50 moving average, EMA. And then the blue one is the 50 MA. And the 618 is pretty much a nice level to, you would say, if Bitcoin was to drop, you can see this level there, right there, where previous all-time high, that's convergence with the 618, acting as resistance, perfect. So this can be a double bottom potentially, and we can also see, some type of wedge scenario playing up. So, yeah, getting rejection there, come back down. I'm not drawn to scale, and we'll probably have some, like a nice. So if we go up to there, rejection, and then good entry. So the 618 is perfect there, and I'll be looking at that. I'll be looking at the tools similar to Bitcoin. Always look for a reversal structure to be confident. Bullish divergence in a reversal structure is pretty much what we're looking for at the moment. This is a 4-hour. If you look on the daily, you can see how we are just downward momentum. There is no reversal at this point. There isn't. There is no reversal looking on Ethereum on the daily, and you can see very closely where the rejection level is. Strong resistance. So yeah, we might have up and down a bit, but I do think we're going to come down to this stronger support level, and that's where you buy. At the moment, there is nothing there. If you look on the 12-hour for Ethereum, there is actually a good sign there on the 12-hour for potential bounce. But so this 12-hour is deceptive because we still got another. What's that? Give us a sec. Why is not the time not in there? That sucks. Where's my oh, there is. Where's the time? Time. Countdown. Stupid thing. Okay, for the 12-hour, we've got 30 minutes. Okay. So that is a positive sign. But the momentum is not above 50%. We do not have crossover with the wave trend, so that's secondary. What we want to see now, that is a positive sign, potentially, for sideways or a bit of a bounce. And that's about it. That's all it's going to give us for the 12-hour, 8-hour. Yeah, so the 8 hours got a rejection already. Look at that. So definitely, no, we're going sideways for a while. And you can see how the previous fib level, which was resistance, acting as resistance. And like I said, in my opinion, we are to go slightly down. There's more. It's slowed down, so people are buying, but I think we need just a bit more push down, ideally. If we were to go down a bit more, I think it will be much more healthier as well. And Otherwise, buying these little dips will just prolong it going sideways. But that's another, that's possible as well. So two scenarios. Right. So that's what I got for Ethereum at the moment. Ethereum was great with that trend line, and you can see historically how these trend lines, these moving averages, once they cross over, they do give us an indication on bullish momentum as well. And so far, we haven't crossed over. So, realistically, Ethereum is still bullish. Until these two cross over, I really don't think there's anything negative at this point. So Ethereum is in a better position than Bitcoin. Right, let's look at ADA. So I'm going to save this and just close it. And when I've been looking at these, it did occur to me that there are certain things happening in terms of the alts. And some of these charts tell us, so like LRC, when I look at this loop ring, I wish I stuck with it, but I didn't. Gave a lot of good trading opportunities, but what I'm seeing is this descending wedge, and I've got these fib extensions, which are potential targets. And so I'm looking at this particular altar as an example, randomly chosen, and it's close to what I think is good support. And that gives me confidence that Bitcoin is near it as well. So just an example, and looking at the bigger picture, that is close to the 0.5 fib level on the bigger structure. And to me, that makes sense as well. So, and here we have previous resistance could pretty much play support right here. So I do see looping that area as as an opportunity to buy for reversal. When to enter, well, depends on what you want to put your money on at the time. But this is, to me, like an example. We had in the local aspect, that's wave 5, but in the bigger picture, it's wave 3 to 4, and wave 5 is going to be much higher. So I think, yeah, I see it like that. So big long. So if this is an accumulation, bear market accumulation. So you can see how different coins are at different phases of the life cycle. And loop ring it's done its dash. Now it's doing wave 3 to 4. It hasn't found the bottom of 4 yet. And where Bitcoin and Ethereum has already done that. So certain coins are different phases. So let's look at ADA. And I think this is where ADA got me mixed up as well, because looking at loop ring, we tend to assume that all the coins are doing the same thing at the same time, and that's not the case. And well, can't see my option. Oh, here we are. Now it come up. Oh, so this is ADA. This is the right chart. I've got FTX. Let me look on the daily. Let me see if it's the right chart. So I had them drawn out. So this is not the right chart. Let me check the other one. Here. No, stays over it. That's not good. Be stupid things like that. No. Is it Polynex? One of the charts had a good history. Actually, this is the one. Just came out slow. All right. Let's go to the daily. Okay, here we go. Okay, so very coincidental that I haven't looked at this for ages, and you can see the fib levels are relevant, and so that level could act as support for, but there is that little possibility that it could come down one more notch. Now let's look at the tools. Let's look at the 2-day for a sec. Give me a sec. Well, strong resistance. No, I didn't want to do that. Definitely strong resistance there. And we got rejected. So by just confirming that fib level, it got a rejection. Daily support there. It's okay. Let's look at the indicators, and not looking good at all for ADA. The indicators are very well pushed down. MACD on the 2-day is pretty much pushed down. And let's see on the weekly. Even the weekly is a bit of sideways, but yeah, you can see the weekly doesn't look good, to tell the truth. I think yeah, the weekly doesn't look good either. So we can potentially, in my opinion, come down to this zone, this level here. If I was to buy, if it came down here, I'd buy there at this point. I don't know why I drew those lines, but probably just experimenting. Actually, let's see on the bigger picture what do we have. So what we had, and I knew this way back, that this was definitely a trend line to respect. All right, that was definitely a rejection level, 100%, just on this macro trend line. So it's very important to have history as well. And so we got that rejection. Now the question is that a channel? Is that going to be the bottom of the channel? So let's try that out. So that's the top of the channel, and that's the bottom. Let's zoom in. The middle. Okay. So we've dropped below the middle, and the middle is acting as resistance. So in the past, it looks like it was acting as support. So the channel, I think it is a channel, and I do think that we probably can come down a bit. Why do I have that level there? Why not there? Yeah, so let me just double check with that fib level on the daily. Let me see if I picked the right spot. So was that a wick? Yeah, that was a wick. Yeah, there you go. So that fib level, we didn't quite touch it. So that could be the lower level slightly. So I do see that coming in. And I've got the log. Let me just make sure I've got this log set up. Yep. Okay. Yeah, that to me that we need to see it come down. It didn't really come quite down enough. And it's, yeah, I do see this level as potential support, $1.73. And we got 1, 2, 3. Yeah, there's no good pattern. unfortunately. This one was a good pattern. Here we don't have a pattern, do we? No formation. So if I was to do that, and I'll pick a channel, sideways channel, like a, and it can work in some cases. No, it doesn't quite work for us. It doesn't give us anything. So the only thing I can see here is pretty much that level. And if it touches it, it could go dip a bit more, but that makes sense. If this is our A, B, C, D, so if I would change that to white, you will see it. So that could be taking place. In some cases, it could be just a flat triangle, right? This could be a bottom. But I think that this has merit. There is that case where you got your, far out these colors. That's one cycle. Then you got your second cycle. So what we're looking for is a third. And that pretty much that's the 5 counts within the Elliott wave of a correction. So yeah, that makes sense to me. That in some cases it just dips, and it could do that as well. So that is our first level, and I'm comfortable with that, with this scenario. And you can have this bear, we'll call it a bear trap, and then up. So the other one is just knocking on that door and then up. So we've got 2 scenarios there, and that's what I got for ADA. And so what I've been looking lately is at different stuff, and this is render, and I think render's done its top on KuCoin, but it's an excellent chart. I wish I put more into it at the time, but it's early days, I think. So if this is a structure, we've hit a local top. Yeah, it might come down a bit, but if the bull market starts, this is gonna fly. So we went down to 30 cents. It's currently $6. Very nice opportunity for a render coin. And then we have surely, if you're paying attention, Cardano's been going crazy, and I think it could still be going. Or Cardano, everyone says it in a different way. I think that's a local top, but I think this could go easily to where it started from, which is $88. So Cardano went all the way down to 30 cents, and it's now $20. Man, I wish I knew about it before. So you got to start looking around. If you not start looking around, there's so many opportunities out there, different coins, different opportunities. And Tribe, I did talk about many times in our group, and this, I didn't stay with it. I mean, it really sucks. So I didn't get back into it right here, but this is pretty much did a local top, and I think it's the 1.272 or so. And where's that I measured? So we can always, those wicks, also put that down there. That can make sense if we just ignore a little bit of that top. The 1.414 and 1.217 makes it look like a local top. And Tribe is one of those coins where, if that's the case, then it's going to take a while for it to do the reaccumulation, different life cycles. So be careful which ones you pick, because if they've done a local top, then there's going to be a bit of a draw, accumulation phase, and you'll wonder why the other coins are going and your one isn't. So you want to pick a coin that has pulled back deep enough, either 61% pullback or whatever the case may be, to a good area where you go, okay, it's probably done its bottom, and you can use a weekly chart, RSI or whatever it is to confirm that and look for a breakout. Pick those coins that have a good trend as well, but it hasn't done its finish. So this one here, realistically, if that was the bottom, all I do is I count 1, 2, and the 3 is still going. So this one's got a long way to go. I'm not sure Tribe. I think it's a game. Tribe. Either way, that's one of those coins, and there's plenty more to talk about. CHR I've been watching a bit. It also hasn't got much of a history. So if you look at that, realistically, this has got a lot to go. It's done this formation breakout, and the 10 and 20 moving average on the daily could be another continuation pattern. So this could continue pretty much. So keep an eye on that. I need to keep an eye on it. I'll do the other stuff with it. But yeah, so that's Tribe. Let me look at if there's any questions elsewhere. Okay. Nothing on YouTube. And on TradingView, there's not much. If you guys want to ask a question, let me know. My tips, if you want tips, long-term investment. That's what I say. It's been proven that hodlers make much more than the traders. So if you continually trade, that scenario is not good. I do recommend that you buy something that's long-term and just hold on to it. Pick a good project and stick with it. Do not sell it. And the way things are going, we have a nice bull market. So if you haven't got any questions, okay, Link. All right, that's a good one. Probably with a few of the coins that I have, I try to do some forecasts, and you can see Link. Obviously, I've done it, and there's this big long-term channel, and I think it's going to be around 120 bucks or so. 110 to 120 bucks is a target based on what I've seen in the past. You can see here with Link, and I could explain a lot. I couldn't go into a lot of detail as to why I think certain things are happening. All I can do, I don't want to teach people here what structure is, but I would say that look for inverted bar and bump and run. Those two strategies represent what we see a lot of the time. And so when I say that, I'm going to see if that's the case on this one. Let's have a look. I want to see if it's the 618 that caused a resistance. And no. Oh, yeah, it is. Okay, the first one was. Come on. So let's put the defaults. No, that wasn't my default. That's my default. That's it. Fibs on. I need a reversal. There we go. So look at that. Close enough. So the 618 here was a resistance for the midsection. So from the top to the bottom of this previous all-time high to the bottom, we can see that the 618 roughly was the resistance. Why isn't it perfect? Let's see. Ah, fib. There we go. Fib, yep. And our bottom's 0. Yep. So it's actually broken above it, slightly above it. So Link actually performed really well. So that was our main resistance, and you can see this trend line. It's retesting this level. I think this is a good spot to buy when it comes to Link. There's that possibility that it can come down to this one. But sometimes these lines don't actually work. Maybe that was the one. Okay, this makes sense. Is it going to retest this trend line? Don't know. Long term, the question is, when you want to look at Link, what do you want to look at? What is that you want to look at, short term or long term? Well, my long term is that I've done this before. This structure is playing out, and it's even going to hit this white line for another bounce, another push up, and we can, with simplicity, we can count these. That's our A, that's our B, C, D, potentially E, and that is pretty much a flat ascending triangle. Is it ascending? It's a triangle or some, and what we have is lower highs. So I'm expecting this to be a lower high. Confluence here in the past where we've definitely seen nice right here all along this zone. We can see plenty of activity as to act as support, and I would be looking at Link to do a reversal in this zone. Very, very similar to Bitcoin, a zone, not one particular area, and a reversal. This trend line could be the wicks that touch this trend line and then go up. But basically, I see this happening and all the way up. And I think the way I worked that one out is from the bottom to the top. And let me just put these two numbers in. And where's our golden ratio? I'll make that Y. That was a golden ratio, the 1.618. It might not hit the top of that trend line. It might just fall short. So it might go to the 414. And if Bitcoin wants to do parabolic, this could probably go parabolic as well. No idea. And that's if it does go parabolic, I had it here. So there is phases within price, and this could easily go parabolic at one stage. So if I was to put, let's see, you got to see the behaviors first before you can say anything. And this could easily overperform and just go up like that. So we just got to see, but I would definitely think that that is this box here between $92, which I think will have a big strong reaction, close to $100, and a deeper pullback, probably back down to 50 something, and then maybe the next cycle it hits the 1.618 or even the top of this channel, depending on how it goes sideways. I do think so. These coins are doing well. I like Link because it's got a flow to it. Engine. Yep, we can look at that. Ah, actually, Engine's going to give us a bit of an opportunity soon. Come on, give me. So what we have here at the moment, definitely a bullish formation. That could be a breakout trade. The wicks are there, but the body of the candles right there. So we can definitely see a nice opportunity here for engine. That is bullish, and definitely an opportunity to jump in if it breaks it. Let's see what the indicators show us. Yeah, MACD's MACD bullish, not above zero, but the stochastic RSI could easily turn back, so could get another rejection. So let's count. We've got to do the count. And what is the count? Number of touches. So there's our first touch here. 2, 3, yeah, 4. Sometimes 4 it goes. I like to see the fifth. The fifth one is probably the likely one to go. The reason being is these are all right. So what we have is a W formation. In some cases, it just does that. So it's a double bottom, that's for sure. And it's got a good response. And if you just do your A, B, C, D, E type of thing, if that's your A, B, C, D, and your E is somewhere around here, and that's a break. The target will be double this height. So let's have a look. Short-term target will be the height on the breakout point. So if it was to break through it, I would definitely be comfortable taking profit. Just about 3.7, close to 3.7 cents as our, and that's what percentage is that? Okay, 15% move potentially. Let's look at the daily or the weekly actually. Let's see what the weekly chart shows us. Okay, if this is the oldest chart, it's got a long way to go, doesn't it? So what I'll do is, oh, we've already got it. We've done it before. Okay. If I'm not mistaken, so this is a weekly chart on the right. And we'll just do our Elliott wave count. I do believe, in a way, that can be 1, 2. Is that a 3 and a 4? And our 5 could be potentially there, which is about $10 if it hits the golden ratio. So between $8 and $10 or $11 is our wave 5 before we get a major correction. And when I say major correction, it's just not a bear market. I think Bitcoin's still going to go through a few phases. So that, yeah, that's what I see. Just doing the basics. If we do a fib extension, let's see what that does. That gives us something. Okay. Not playing ball. I'm stuck. My browser's stuck for some reason. and probably my machine's done. I'm looking at getting another machine. It's just playing up. I don't want to reinstall software. But that's all I got, guys. So how long has it been? It's been 9:30. Yeah, that's long enough. So I'm wrapping it up there. It's been a while, and hopefully I'll come back online tomorrow and continue on the story. Anyway, come and join my Telegram group. The details in my signature, and you can ask more questions on the channel. Free admission. So I'll wrap it up there. Have a good time and good trading, and hopefully you've picked up some tips and some